Good afternoon, friends. Hope everyone is enjoying their weekend. Today, we had shared a learning poll on a powerful candlestick that is observed in the charts to help our users understand the price action better. If you look at the question, we had posted a bearish candlestick pattern, which is shooting star on the chart. 57% of our participants at the current time voted that prices will go down. Is this a correct choice made by them, or it's a simple incorrect interpretation that many of us do in the live market? Let's learn it through our easy filters that we apply on day-to-day basis in the technical analysis to improve probability of winning trades. So now friends, let's look at the chart. For a price action trader, right, you always look from recent to past dates. The idea is for a trader to gauge the movement of securities price and plot it back to the time. A price action trader typically merges the past trend with the formation of candlesticks on the chart to extrapolate it to future and make an informed trading decision on whether the probability of him winning this trade is very high or is it low. From a risk reward standpoint, does he tend to gain 1:2, 1:3, or does he tend to lose this trade? So coming back to the chart, we see a shooting star candlestick on chart. Now, when I plot this with the context, right, as I mentioned, from a price action trading standpoint, you have a candlestick and you have a context, the price plotted over time, right, from left, from recent to the earlier dates. What does this chart tell you? The chart says shooting star is formed exactly in between a swing. It's neither at the highs nor at the lows. From a trend standpoint, if you see, it's in a consolidating phase, and market is forming a higher lows. When I say market, it's Reliance, which is forming higher lows. So shooting star, which is a bearish candlestick pattern, right? What is my expectation here in terms of this trade going forward, right? So I will play the, I'll replay the bar to actually see what happens next. There is a selling pressure. It keeps coming down. Yes, the entry for the candlestick traders would have not triggered because the entry for any shooting star is below this candle, right? We wait for the entry. We wait for the entry. I'll just pause here, right? If you see, it's continuously consolidating. There is no selling pressure which is being able to take the security down. Right? Clearly, people who voted for option A, looking at the candlestick, just the candlestick, right, would have got it wrong, or many people who would have entered the trade wrongly here would have exited it either cost to cost or with a, a minor loss, or would have got frustrated with this entry, right? Now, if I look at it, right, I would rather wait for this. Again, given the higher lows are being formed, I would rather wait for this chart to form a support here, right? Now, support, again, I'm looking at this particular entire this area, which is between 2020, sorry, it's between 2217 to 2200, right? The idea is this is a good support zone. One should, once it hits this support, and there are certain entry modules that we help you guys learn, which again over a period of time I would share some videos, right, so that you get a clear sense of what are those entry and exit modules to target for these swings, right? The swing, the first target would be somewhere here, the second target would be somewhere around 2290. So let's see what the chart did. It came down, it came down, right? Again, the selling came, but there is no follow up to this. It's now hit the zone where I'm looking at long trades. Will I buy the long as soon as it hits the zone? The answer is no. Now, when to enter and exit? Again, we would help you guys learn that thing, right? It goes up. If you see, it's taking support. It's forming some indecision candles at hammer. Typically, people would enter. I would look at this as a first target, and the second target would be somewhere around 2290. If you see, it's given the targets in single candle. So friends, again, important, right? The idea was to just help you guys understand the trap candle, right? Don't look at candlestick in isolation, right? A shooting star, a bearish engulfing, a hammer, a bullish engulfing, marubozus, right, which are formed exactly in between the swings, will not yield you the desired results. Rather, put the context of the swings and the trend of the market, right, to just fuse it to make a better informed decision. In this case, given this is a selling candle which is formed in between the swing and the swings are moving higher, right? I would ideally expect, as a price action trader, I would expect these highs to be taken out because your lows are being protected. Will this be a guaranteed trade, a 100% winning trade? The answer is no. It's just that the probability of this trade turning into a winning trade is high. And if I enter this trade at the right place, my stop losses are minimal. Again, always remember, in trading, it's not about winning a trade. It's always about having a high probability of winning a trade. And if you lose, you lose small. If you win big, right? So given this was a high probability long trade, I would head, and there was a bearish candle formed. This becomes a trap candle for me to actually start looking at a long trade. Entries and exits we will cover in the future learning sessions. Hope you guys found a good value of your time here. Continue learning, friends. Price action trading will make your life very simple. Looking forward to join you guys again. Thanks.